Hello, my name is Mark Mayfield, and welcome to another PFA update. In today's video, we'll discuss a couple of things to keep in mind as we head towards the second half of 2024. The first half of the year, we've seen a strong rally in the market, mostly fueled by optimism of a future rate cut at some point this year. Also looking at the artificial intelligence, and we've continued to see those stocks rally this year. As we look forward towards the second half of the year, Fed interest rate cuts are still going to be a hot topic. We also have the presidential election coming up in November, and so we'll hit on both of those items here in this video. Here we have a chart looking at the federal funds rate going back from 2000 through current. So you can see the history of what rates have been, where we're at today at 5.25%. And then we also have the dotted line on the end, which is kind of a projection that the Fed has released in terms of where the Fed fund rate may be going over the next few years. In their most recent meeting, the Fed had stated that inflation remains elevated, but it is showing signs of easing, and therefore there is a potential that they may be cutting rates sometime in Q3 or Q4 of this year. And based on their projection, it looks like we may see some more rate cuts in 2025, 2026, and 2027, bringing that Fed funds rate down to a 3% level versus the 5.25% that we're at today. Generally speaking, these rate cuts are considered positive for the stocks and bonds, and so we may see some sort of run up in the markets should the Fed continue with this projection. The upcoming presidential election is arguably the most talked about event as we head towards the second half of the year. This chart just outlines the S&P 500 price returns going back to 1933 through current, and breaks down those returns by political party that was in power and the president who was serving at that time. As the chart shows, regardless of political party, the overall market and economy has continued to grow and progress throughout the decades. Politics do have an effect on taxes, different various regulations, trade policies, but oftentimes, through media, a lot of those are the impacts and timing of those are often overestimated. So bottom line with this is, focus less on the day-to-day noise and news of the election, and continue to focus more on economic and market trends, along with just staying true to whatever retirement plan or investment strategy you have in place, and try to not make emotional decisions based on the upcoming election. With that, that concludes this video. Thank you for watching, and we'll see you next time.